my name is Veronica Dragona, and I'm a first-year economics student at Spelman College. If I was to choose a stock to invest in, I would select Shopify, which is a software application that specializes in e-commerce. And its ticker is SHOP, and it trades at $127.41. As creators begin to turn their audiences into businesses and people primarily only start to exclusively shop online, Shopify is positioned to benefit both sides of the market. As someone who has personal experience, when I started my business when I was 13, I began to grow to love the functionality of Shopify as a new user myself, and because merchants were able to own their own brand, data, and customer relations. Outside of Shopify, when we look at the global retail e-commerce, it's projected to grow from $6.42 trillion to $7.89 trillion by 2028. That is roughly 23% of growth in just 3 years, showing that investing in Shopify has an exponential ROI for investors. And Shopify is able to extend to financial services, payment, and fulfillment, lowering the learning gap for entrepreneurs. That way, they don't have to handle logistics and can just focus on scaling their business. The main competitive risk is through Amazon because they have built-in traffic, but I would argue to say that Amazon also has extremely high startup costs, which make it unattainable to use for small creators. And because Shopify's main users are built off small creators, they are more vulnerable to economic downturns. Shopify trades at a premium valuation between traditional software companies and its peer group. Its PE ratio is around 125x compared to mature software companies, which trade between 20x and 40x earnings. This means investors are willing to pay a significantly much higher for Shopify's earnings because they expect it to have strong long-term growth. And I can attest to this, being a user and understanding its potential.